Hello there. I'm going to take a look at the wheel strategy and whether or not this is a trade that is either over marketed or is it something that could work for you? Okay. And I'm going to take a look here at my option trades. Okay. And in particular, I'll take a look at this losing stock I have. It's CRISPR. It's a biotech stock. And it is an extreme example. This was my stock of last year, and this year not doing so hot. So what I'll do here is take a look at it here. Okay, currently this trade is down. Okay, down $336. I took in a credit of $439. Okay, and this is going back on the 7th of January. So if you're looking at the wheel strategy, and again, this is an extreme example, but still, you got to take a look at it. So this is the 7th. I traded this stock here. I sold this put, or I rolled this put up on this bar right here and wrote it up, and it hit 220 for a high and down $100 to 121. So if you were doing the wheel strategy, basically you would be selling the put. Okay, usually what I see here on YouTube, traders are selling a put maybe 2 weeks out, or definitely within the same month, the front month. And if they get assigned, okay, they get put to stock, they wake up on Monday morning and they'll sell a covered call against it. And that's all fine and good, but there is risk in the stock. It's not it's not free money. They're not giving you free money. You're taking risk. So here, if I'm in here at, in the 180s here, I say I sold a put here and I wrote it up higher. That's great. Okay. And I don't know if you're trading that front month, maybe you were rolling it up. Who knows? And you could end up over here around $200. Okay, selling a put. And then what do you do now when you would definitely get put the stock with the drop in the market on this stock? Okay, uh, when would you sell that covered call? Okay, you'd be selling the upside call. Again, the risk is in the stock. Okay, so you would find yourself in a not so great situation. Okay, and this again is an extreme example, I know, um, but you would be selling that upside call. You'd be obligated to sell your shares at that price. Now you would collect a little bit of that premium to give you a little bit of a cushion, but it's really not going to be much of a cushion if it continues lower like this, right? So, that's $100 move. You know, there is no free ride. There's no free money trading options. There's plenty of risk. And when you see people on YouTube, a lot of them aren't even showing their accounts and what they're trading. They're just speaking before the camera and they're telling you how wonderful the strategy is. But you should know, put selling, same risk profile as covered calls. Your risk is in the stock, okay? And same is true for most strategies. You have to have a bias on the stock, okay? So that's and what I would do, by the way, in this particular case. Now, I'm not too worried. Now, you have to look at your portfolio as a whole, okay? And hopefully you have some hedges on, right? You got a hedge with the S&P, and you protect your downside and be proactive in case there's another major event. You don't know when that's going to happen. This time it was coronavirus. Last time it was, mortgage crisis. You could drop at 50% at any given time on bad news. So definitely hedge your account. Okay, and it may be a drag on your portfolio, but well worth it. Well worth it. And in a lot of cases, you can find ways to pay for it using the same underlying. But I won't get into that right now. But you have to look at your portfolio as a whole. And again, this was my stock of last year. Now I'm down here. Now I collected $439 on the 7th of January, or where I rolled it up from a prior trade. So if I was sitting here at a loss of $439, that is a price at which you may want to get out. If you're just trying to protect, if this stock continued lower, that would be one way to get out. A lot of people wait until they get to break even, but that, look, you could be way down. But for me, what I would do is I just roll this thing down. I'd buy back this July 95 and I'd go to January and sell the 70 put and still collect a credit. In this example, it'd be $255. So in addition to recouping my loss here of $271 and the credit here of $439, I'd collect $255. So that would be the way. I mean, that's what I would do. I'm not telling you what to do. I'm not a financial advisor. I don't know your situation, and I'm not recommending any stocks. So this is just educational. So educational purposes. So that would be how I would look at it. That's what I would do. I would just simply roll down and out. If my bias is still bullish and I think this company is going to come back. Now they did have a shitty report here on this day, and I guess a lot of these traders knew here that they were selling this down. But that's besides the point. The wheel strategy. It's all in the stock that you're trading. You don't, if you're selling puts, I mean, unless you really want to own stock, that would be the only. I mean, that would be the only time I would probably want to do that, is if you got to own the stock for whatever reason. Who knows? I can't think of a reason to own stock. But don't just trade to trade. Just find a mix of stocks that work for you. And you could take shots with stocks like this, biotechs. But this is part of an overall portfolio. You have to look at your portfolio as a whole, and whether or not you're willing to take a little heat on a stock. Okay, here's another one, Dollar General. I'm taking some heat on that as well. So that's what I wanted to let you know about today. These guys that come on YouTube and other places, they're sharing with you this wheel strategy as the greatest trade in the world. But the reality is, you have to look at your risk. Don't listen to people that tell you that you can make, X amount every month, or say 5 or 10% or 20% a month. You should be focused in on the risk that's in every trade that you're making as part of your portfolio, and try to mitigate the risk as much as you possibly can. And a lot of these guys, they're not even showing their trading account, and they're telling you how to trade. It's just, I don't know, it's a little disturbing. there's a lot of money in education here for option trading, and so there's, I mean, there's nothing wrong with paying for some of that education, but a lot of it's free. And Tasty Trade, it's a great. You can get all that options trading on Tasty Trade for free. And again, they do have their business in mind because they want you to trade with them. And you may find that what they trade, it might not be right for you, but at least you'll learn. You'll learn how to trade. You'll learn more. They have, their education is fantastic. It's just um, they're. I just wouldn't trade like them. I don't like to trade so close in time and a few other things, but they do advocate trading small, which is great. Okay, and just remember they're operating a business and they want your business. So the wheel strategy is fine, I guess. Okay, the risk is with the stock. Just keep that in mind. And that's all I have for you today. Okay, have a great night. Ciao.